This is part one in a series I'm starting to help you master risk management in any market. Now, first realize that without understanding how to manage risk, you're never going to find success and consistent profitability in the stock market, in Forex, whatever it is that you're trading. By the end of this video, you should understand the balance between risk to reward and win rate and how to find what I like to call an equilibrium in both to squeeze and make as much money you can out of each and every trade that you take. If you do not understand how to manage risk, you will never find consistency and profitability trading in the stock market or any market. I want this to be an uncut and straight to the point, no BS conversation about risk. I've been trading for the past 7 years, and in the beginning, risk and managing risk was one of the most stressful topics when it came to trading. The technical, the fundamental analysis came easy for me. But what was hard was, how do I go about properly managing risk? What does properly managing risk even mean? You just have to understand in the first place that without having first the initial core understanding of the balance between win rate and risk to reward, you're going to be finding, a lot of difficulty to ever make money trading. If you understand first the correlation between, like I said, win rate and risk to reward, then you'll be able to take steps in the right direction to manage risk. And there's many different ways to go about managing risk, and neither one way or the other is necessarily right. Risk management is not a one size fits all, but after spending years and years in the market, I've kind of developed ways that I like to go about managing risk based off the way I trade. So this is my opinion and my, knowledge kind of all clumped up into a couple videos in this series I want to make. And actually what you see on my screen right now is a calculator that I developed to help me manage risk. We'll cover what that is, and I'll use it to give you some examples because I feel like showing is better than telling. I can use this calculator to show you what I'm going to be talking about in this video. And then hopefully all the pieces to the puzzle will slowly start to come together, and you'll understand not just the importance of managing risk if you want to obviously make money and find that consistency, but you'll be able to either take exactly how I manage risk and implement it into your trading, or you will be able to go about applying the same concepts that I'm going to talk about, or deciding what you'd like to take away from kind of this conversation, right? And apply that to your trading. In this video, like I said, I'm going to talk about this balance between win rate and risk to reward. What is risk to reward? Now, risk to reward, to keep it very simple, very straightforward, let's say you have, and it doesn't even need to be trading related. Let's say you have one part, okay? You are ready to risk one part. And based off of being ready to risk that one part, in return, you, if you're right, will get 3 parts. So you're risking 1 to get 3. That is a 1 to 3. That is your risk to reward. It could be $100, it could be $1, it could be $1,000. Doesn't matter. So if you're risking $100 on a trade, your reward is $300 on a trade. That means your risk to reward is a 1 to 3. Now, that should make sense. Very straightforward. When it comes to win rate or strike rate, what does that mean? Well, out of how many trades are you actually right? So let's use 10 trades as an example. Let's say you take 10 trades, and out of those 10 trades, 6 of those trades you are right. You win those 6 trades. Now, that means you have a 60% win rate or a 60% strike rate. Okay, so you understand what risk to reward means. You understand what win rate means. That's the easy part. But how do these two come and work hand in hand to essentially find that profitability? How are you going to look at both of these variables? Let's look at my risk management calculator here. And I want to first make you aware of one fact. If you've seen anyone talking about win rate on the internet, they have an 80, a 90% win rate. Well, it does not mean they're profitable. Because you have a high win rate does not have there's no way that you can look at someone and their win rate and decide whether they're profitable or not. You can have a 30% win rate and be profitable based off of the risk to reward behind the trades you go about taking. Now, if someone has a very high win rate, more than likely they're trading very low risk to reward trades or setups. That will make sense. But just know that win rate as a whole is not a determining factor in your profitability. And my goal throughout these couple videos is to hopefully take you from one of these places on this ladder I like to use. And traders start out, they typically are losing a lot of money, losing a little, trading flat, making money, and then squeezing the most out of their system as possible. Now, wherever you are on that scale, I should be able to help you increase your way, or work your way up that ladder to squeezing as much money out of your trading account as possible. If you're losing a lot, don't worry, we'll get you to the point where you're trading flat. And if you're trading flat, you want to start making money, then great, we'll get you there too. So no matter what place you're in and you're trading, don't worry. So let's use these variables: win rate, average winner, and average loser. Now, the average loser, that is going to be your risk. That is going to be your $1, $100, 1%, 10%, whatever the case is. The average winner is going to be your reward. Okay, that could be $300, that could be 30%. I'm using percentages, okay, for my average loser and average winner. Now, let's say my average loser is 10%. And let's say my average winner is 30%. That would mean, on average, I am risking one part, or 10%, I'm risking one to make 3, or in this case, 30 back. So risking 10% to make 30%. I'm taking a trade, my risk is 10%, and then if I end up not hitting my target, if I end up getting stopped out of the trade, whatever the case is, if I take that loss, well, I just lost 10%. If I win that trade, I just made 30%. So this is a 1 to 3. You can see, and I'm going to cover what all of this means. Don't worry. Risk percentage, account size, upside, downside, asset value. Over the next couple videos, I'll cover that. Now, what you need to focus on is our break-even risk to reward. Based off of these variables, if we had an average loser of 10 and an average winner of 30, our break-even risk to reward ratio is a 1 to 2. Now, let's say for win rate, we'll go with 60%. What I want you to look at is the expected return down here. Okay, you can see right now we have a positive expected return. Now, 0 means you're trading flat. Red, a negative expected return, means that you're losing money. And then the further we can progress off of a 0 expected return just means we are becoming more and more profitable. Now, what you're going to see is that if you trade a high risk to reward, and when I say high risk to reward, if you are taking trades where you are risking one part to say make 4, 5, 6, what is going to happen is you will see a decrease in your win rate because those targets just are not getting hit. Now, based off the way you trade, let's say maybe 30%, that's never going to happen. Let's say your average winner is 15% and your average loser is 5%. Now, that is still a 1 to 3, but your risk is now 5 and your reward is 15. So we can see our break-even risk reward in this case is a 1 to 3. Now, let's say because of the fact that we did just decrease our average loser by 5, maybe we'll start hitting our stop loss more, but we also decreased our average winner in half, right? Well, maybe we'll start hitting that target more. So maybe instead of a 60% win rate, we bump our win rate up to 75%. And now you can see we have a 10% expected return. So a very positive expected return. Now, some traders are profitable trading with a 30% win rate, which means that taking a 1 to 3, you are still going to be profitable. Let's say, I don't know, maybe you have a 60% average winner and a 20% average loser. Now, let's say you have a 90% win rate, or let's say 80, right? Because I know some of my students who have an 80% win rate, but if you are trading a 5 to 15 on a 1 to 3 basis, obviously we're going to be very profitable. 11% expected return. But let's say to achieve that 80% win rate, it means that your actual risk reward might be the opposite of what you'd assume to be deemed a good risk reward. Now, some people say that you should only take trades where your potential is greater to make money than lose, where you are risking less than you have the potential to make. But you, in some cases, and based off of, again, win rate, you could actually risk more than you'd even make per trade. So for example, let's say your average loser is 10 and your average winner is 5, you're still going to have a positive expected return. You're actually risking twice as much per trade as you're willing to make. Okay, and you can see our break-even risk to reward ratio is a 1 to 0.50, but due to the fact that your win rate is so high, you're still profitable. Now, if we decrease this to an average winner of 3, we're still profitable. So you can see here now with a break-even risk reward of a 1 to 0.30, you can still make money. Let's now say you have a 85% win rate, and we're still looking at that average loser of 10, average winner of 3. You're still going to be profitable. Let's drop this down to 2, still profitable, and let's drop this down to 1. So you can see now we are in the red. Is an 85% win rate realistic? Yes. Now, if a student comes to me and I have their data, I can easily punch in their average winner and average loser. And I've seen this in a lot of cases. And this is typically what I'll see. I'll see someone coming in with a 51% win rate or a 55, right? Just they're winning over half of their trades. However, they're losing money. They're not profitable. And I'll ask them, what's your average winner? What's your average loser? And I'll punch it in. And let's say one student comes to me with a 15% average winner, but their average loser is 20%. And I ask them, okay, well, with a break-even risk-reward ratio of a 1 to 0.75, you are going to have a negative expected return. So what if you just decrease that average loser? Let's bump up your stop and stop getting taken out of trades for a 20% loss. Let's say a 15% average loser. Now I just got you to the point where you are trading flat. Okay, virtually flat, because we have to account for a little slippage. If you have a 1.50% expected return, yes, you're profitable, but just by barely. And that would just be risking one part to make one part. And you can see all the way down to actually having a 51% win rate, you would still be profitable risking one to make one. And at a 50% win rate, you can see you're flat. And I think traders, you've probably heard, oh, a 1 to 3 is the optimal risk to reward. And people say that because a 1 to 3, as we've seen in this example, really just means that you are going to be able to lose way more times. Actually, over 70% of the time, you're not going to be hitting your target, but you'll still be profitable. And I think it's an easier thing to throw at a trader, and that's the kind of miscommunication amongst the discussion of win rate and risk to reward is traders don't realize that by putting on trades where they're presented with a 1 to 3 risk to reward, or they're only taking 1 to 3s, they have to be prepared to lose 75 or whatever the case, 70, over half of the time. So we want to come to an equilibrium of sorts. What is the perfect win rate? And what is the perfect risk reward? What is my optimal risk reward and what is my optimal win rate? What does that mean? Well, we want a positive expected return. First, we want to be realistic. We want to look at the way we're trading. Maybe we'll be putting on positions, for example, if you're trading option contracts, where it's easy to hit that 30% average winner. But in other cases, based off of how you trade, maybe you'll never hit a 30% average winner. So by setting more conservative percentage basis targets, for example, trading a 5 to 15 versus a 10 to 30, that is still a 1 to 3 in either case. Well, the 5 to 15, that is probably more of a realistic benchmark to work off of. Now, that is going to conclude part number 1. Make sure to subscribe if you want to continue following along and learning how to master risk management in any market. Now, if you guys want the risk management calculator that I started diving into today in this video, you'll actually get access upon joining my mentorship group. Now, if you want to apply for my mentorship, if you want to learn what is included besides the risk management calculator, at the end of the day, if you want to make money in the stock market, you can click the first link in the description below, fill out the application, and if you're accepted, I look forward to helping you find that success you've been looking for.